Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Quenny Good Night. Today is Tuesday, March 17th. I'm Huang Pengra. You should all be able to hear my voice and see the screen, so let's get started. Today we'll be discussing some key points from Jensen Huang's speech last night, or rather early this morning. We'll also look at whether there are any hardware investment opportunities or strategies based on these highlights. In addition, we'll talk about the impact of these developments. As for the follow-up, we can continue to observe these changes over the long term. Right now, the market as a whole is still relatively unsettled, with a lot of volatility in different sectors. For example, oil prices have gone up again, which we'll take a look at in a moment. First of all, this week, actually today, there will be the release of the morning mist sales data. This data is expected to remain in a relatively weak range. Since interest rates are currently quite high, morning mist sales might also be affected. Could this lead to a rather sluggish situation? Alright, so for today's event, yesterday we had GTC. Moving forward, we might talk about OFC or news from other industry companies, as I mentioned before. Okay, let's first take a look at the summary of the keynote speech from GDC. Overall, he mentioned that right now, the company's working hard to transform from just making chips into an AI infrastructure provider and a factory operator, because he realized that the future of AI is an integrated system. So as a company, they hope to maintain a leading position throughout the different stages of AI evolution. Therefore, the supply chain needs to adapt to these technological changes, and their role is also evolving accordingly. The main point here is that AI inference has already arrived, and companies need to have a token strategy. Actually, when it comes to GPUs, their biggest strength has always been training, but this time, regarding inference, they've also made some updates, as we've seen. Currently, inference is the area that's being used the most and can be scaled up even further. There are some channels that interact with humans and solve complex problems. As for the token strategy, it depends on the capacity and speed of the model. So as a company, you might have to weigh whether you want more speed or more completion. Of course, having more of both is ideal, but if you can't have both at the same time, you'll need to make some trade-offs. Going forward, when it comes to corporate marketing and profits, the token generation rate will become a key consideration. So in the future, as companies execute their business plans or think about their next steps, tokens will become a very important factor. He also mentioned that in the future, when it comes to job interviews and hiring, it won't just be about salary anymore. You can also look at things like tokens. That is, companies might consider how much token computing power they can offer you and use that to attract talent. In addition, he mentioned something pretty important, which has also been widely reported in the news today. By 2027, this architecture is expected to generate about $1 trillion in revenue for companies. Previously, the company had predicted that by the end of 2026, these interfaces would bring in $500 billion in revenue. So basically, after another year, they've extended the timeline by a year, and the projected revenue has increased. The number has doubled, so at present, the company as a whole still remains relatively optimistic about AI. As for the overall launch timeline for this new product, they also provided a pretty clear introduction. They talked about the current status of the Vera Ribbon platform, saying that it has already entered full-scale mass production and that shipments to some partners will begin around the third quarter of this year. It's expected that production will ramp up in the fourth quarter, and the period from the fourth quarter to the first quarter of next year will likely see the highest volume. So going forward, we'll need to keep an eye on whether they can continue to secure funding, whether shipments can proceed smoothly, and whether there will be any delays, since, as with Blackwell before, there were some delays. If shipments really do go smoothly, then the stock price should still respond, because right now, well, yesterday was actually the first time they shared more details and talked about the shipping schedule. So at this point, the stock price is still it's normal that there's not much reaction yet, because we still have to wait until there's more concrete evidence that is actually happening. Okay, once shipments are confirmed and maybe suppliers really start shipping and things start to look more solid, only then is the stock price more likely to go up. So right now, it's probably still at a relatively early stage. Brother 305 milliamp hours mentioned that the Rubin Ultra is expected to launch in 2027, and of course it'll be equipped with up to 140 GPUs. In the future, there are even more plans for it. Currently, the company is maintaining a product iteration cycle of one update per year. After that, there will be the Feynman, which is set to debut in 2028. So going forward, they will continue to roll out updates. All right, so for now, what we're seeing is that this year, the Vera Rubin will be released. This product combines a CPU, GPU, and LPU. The LPU is particularly well suited for inference and reasoning tasks. Once the LPU is connected with the GPU and CPU, it can be considered a truly powerful AI tool for everyone, because if you only have a GPU, then that's a weak point. So to address this shortcoming, the CPU is redesigned to handle it, and then it works together with the licensed LPU. So at this point, the product lineup is pretty complete. After this thing is launched, it will actually put a lot of pressure on competitors like Intel or AMD, really squeezing the room to survive. You can see, for example, with DPUs, those used to be Intel's biggest source of profit, but now this means that CPUs will also have to be made in-house, so essentially this will put them in direct competition with Intel. As for AMD, if their Plus products still can't deliver a significant improvement, then they might just end up getting left behind by Huena. Another thing is that this time, Variable mentioned that they're fully implementing warm water liquid cooling and rack-level power management. What they're trying to do is overcome this issue. It's about tackling things like energy consumption and cooling bottlenecks, aiming to achieve the highest possible output per watt. Because they mentioned that once the data center is set up, the power generation and electricity usage will probably be fixed or only change slightly. So the improvements have to come from internal structure, or some of the improvements are made to the racks or to the internal design to make things more efficient and closer to perfect. So that's the current direction of development. Of course, we still need to keep building out power infrastructure, but that actually takes time. Given this background, we're first addressing the parts we can solve right now, and that's the current development direction. All right, so let's take a look at AI and sovereignty. There are actually still a lot of opportunities here. This chart is divided into blue and red sections. The blue represents relatively stable options that investors can refer to, while the red indicates areas that currently have more momentum and energy. The stocks in these areas are likely to see bigger gains going forward. However, whether these stocks or the market as a whole will actually perform well still depends on the overall market sentiment. So, at the moment, if the atmosphere for hitting the daily limit isn't that strong, overall, at the moment, these stocks don't have much opportunity to perform, but we can still take a look at whether there are any good related stocks after NVIDIA announced some technical architecture or details at GTC. The first ones are Broadcom and Marvell. Basically, the main thing is that connectivity is still very important. It really emphasizes that Broadcom is a strong company with a powerful market position at every level. On the other hand, Marvell, whether it's in connectivity or in-house chip development, also has some pretty good advantages. So going forward, everyone can keep an eye on these two companies. So next, the second focus is actually the coexistence of copper and optical. Right now, as we mentioned yesterday, in the future, copper might still be replaced by optical. But looking at it now, copper still has a place in the future. Previously, individual stocks related to copper wiring were under pressure, but now there are some short-term opportunities, mainly with ALB and CRDO. So moving forward, for now, both copper and optical will continue to be shipped together, and both will be expanded at the same time. So at this point, copper hasn't been completely replaced, and it looks like it will still have its own place in the future. Next up is power management and power devices. Ultimately, the main focus is on power conversion and voltage changes, as well as figuring out how to handle current exchange between cabinets. So JK said that MPW, Han, and VIC all have very solid performances. In addition, ETN and PWR are actually very stable companies. No matter if it's AI infrastructure or energy infrastructure, you can always find these two companies involved. So if you're thinking about investing, Yeah, stable, and then stable, and always stable. If you're looking for stable stocks, you can consider these. But when it comes to liquid cooling and data center components, we've always leaned toward VRT. As for server replacement, that's MOD. MOD used to be just a manufacturer, but now it's stepping into the AI field. So in the future, why does it have more room to rise? It's because there's a chance for it to be revalued. As for MD, it already had a run up before, and now, as the market sentiment cycles back, it still has quite a bit of potential going forward. On the other hand, if you want something even more stable, you can also consider FIS and EME. These two companies are both electromechanical engineering firms. These companies, well, they're considered industrial stocks, but they've also branched out into AI, and at the same time, they can benefit from the manufacturing sector. So these two companies are also worth keeping an eye on. They both have a very stable stock nature. Next up are the key hardware materials, hardware manufacturing, and specialty materials. The main ones here are Coors and Corning. The importance of these companies goes without saying, so later on, we'll take a look at the stock performance of each of these companies. First up is ABGO. Right now, ABG is still consolidating, and there hasn't been any real breakthrough yet. However, the outlook for the after-sale situation is actually quite clear and positive, so it's something everyone can keep an eye on going forward. Next is Marvel. It's actually doing pretty well too. And with OFC coming up in a few days, we expect to see more updates at both OPC and OFC. So next up is A-Lab. As you can see, similar stocks are all performing pretty well right now, and there should be a rebound opportunity coming up soon. Of course, assuming the market environment stays favorable. Creed is in the same situation, just like Aliens and others. Next, we have the company that does optical communication packaging. Probably Net. So this company should have pretty good prospects in the future, and that's because right now, in the future, optical technology will still be the main dominant system, and its integration is extremely complex. FN has the capability to really master this area. Going forward, whether it's in optical modules or later in GPUs, this company will continue to play a role. They're also starting to research some laser-based solutions, which can be useful for technological upgrades in the context of CPUs. So there's definitely potential for future opportunities as well. Also, this kind of stock was recently added to the S&P 500, so there will be more passive funds joining in. As for MPW, its performance has been very steady. Since the stock price is relatively high, everyone should just use it as a reference. As for Visa, actually, its performance has been relatively good, and its outlook should be positive as well. It's been slowly trending upward. As for the next company, its revenue growth is actually in the single digits. It might not even have reached double digits, but it's just a very stable company. It's mainly involved in converting electrical power voltages, so you can keep an eye on it. Next, regarding some ETNs, if you look at their charts over a longer period, they're actually quite stable. Right now, there's actually been a slight pullback, but PWR is an even more stable company. You can see that in the past, it's rarely had any corrections. Most likely, it'll hold steady around here and then gradually move upward again. So if you're looking for a really stable stock, you should definitely consider PWR. As for BRT, we've actually mentioned it before. Its performance has also been pretty steady, but its biggest challenge is that it's already gone up quite a bit, and everyone knows it's a good stock. So if you're thinking about investing in BRT now, well, it's like this. The cost-performance ratio isn't as high, so people might feel that MOD is relatively higher right now. At the moment, BRT still offers some investment opportunities, but if you're looking for something more stable, you'd mainly go with BRT. So there are still 4 fixed options now, and I can tell you that in terms of these kinds of electromechanical engineering stocks, their trends are all pretty stable, and there aren't really any opportunities for a pullback. For example, PWR1 is like that, and EME is in a similar situation. Its trend is actually a bit worse than fixed, but if you look at the bigger picture, it's still quite good. Alright, so as for COS, it currently looks like it's in a bottoming phase. Going forward, there should be more obvious developments in the market, so it really depends on when the stock price can break out of this consolidation range. It's kind of similar to what Broadcom is experiencing right now. As for County, it actually pulled back from its high point, but there should still be quite a few opportunities ahead. Alright, next let's talk about whether there are any other important observations from the current GTC or if anything significant was mentioned. Also, during the presentation, the speaker mentioned that in the future, data centers might even be moved into outer space. They introduced the Very Robin Space module, emphasizing that this design is actually suitable for orbital deployment. It's designed for satellites and can provide 125 times the computing power. This also means that NVIDIA is taking AI infrastructure into the field of national defense and aerospace. This shows, yet again, we see another company talking about the concept of aerospace, specifically manufacturing centers in space. So, in the coming months this year, plus the IPO of SpaceX, these space-related stocks are definitely worth keeping an eye on, because in the future, honestly, it's something. We don't know when it'll really take off, because it looks like in space, it's really hard to achieve things like heat dissipation, because you can only rely on radiative cooling, and radiative cooling is actually not very effective, so this challenge is still huge. That's why, for now, no one is really. How exactly should I go about it? Well, this is really just a space for imagination. So in the future, there might be a wave of investment opportunities in this area, especially in the space sector. In addition, they've also released the DLSS-5 technology, so everyone can check out their presentation. The visuals, they've managed to make game graphics look almost as realistic as movies. That's actually pretty impressive, because it really feels like, when you look at those visuals, it almost feels like real people are acting in them, or at least it gives you that illusion. But in reality, it's all created by computer technology. They use real-time neural rendering models, which allow them to inject film-level lighting and textures into the game graphics. It's like when you're playing a game, it's almost as if you're shooting a movie. And, in games, you can often design your own scenes, and things change depending on the different stages of the game. So it's kind of like you're even more immersed in that experience. Logging into the flagship version, it feels like the experience could be even better. So in this way, it also helps the company further solidify its absolute advantage in the consumer market and in GPUs. Alright, next, they talked about the rise of OpenCall. So what's the main point of launching this? It's mainly for OpenCall. Well, OpenCall is an autonomous AI, and it's actually something without restrictions. We'll get into more details about that in a bit. As for this name account, it's for this kind of thing. It's for companies that have more protection and privacy settings like this, so the businesses can feel more secure and be more willing to use open cloud. That's the idea. So what exactly is OpenCall? It's actually been pretty popular lately, so let's take a moment to explain it. So everyone is already pretty familiar with ChatGPT. Its model is that you can ask it questions, interact with it, learn things, or have it organize information for you and so on. It's kind of like a little assistant, but you have to give it input. If you keep giving it input, then it will give you output. You have to keep having a conversation with it. That's basically what it is. It's a model where you only list one action at a time, but OpenCall is different. It's like a digital employee that can carry out tasks on its own. It's kind of like after you give it an instruction, you don't have to pay attention to it anymore. It can go off on its own, try things out, make mistakes, or gather information by itself. It collects the correct answer, or let's say it gathers some answers, realizes which ones are wrong, then self-corrects and keeps improving until it finds the right answer or completes the task. So it's kind of like you give it a task and it can infer and adapt, continuously correcting itself along the way. It acts like a doctor, then verifies, then reviews, and so on, and finally, when it gets the correct result, it achieves the goal. So it can autonomously carry out complex tasks and can be connected to language models. It can access internal company APIs, retrieve data from databases, and so on. Basically, as long as you give it a goal, it can automatically break the tasks down into smaller steps and complete them on its own. So with this, you don't have to keep interacting with it, right? You don't need to keep chatting with it like ChatGPT to get a result. Okay, so this is actually a big shift. It means software is moving from being just a tool to becoming an autonomous system. That's also why, moving forward, many people in the industry believe that every company will need its own open cloud strategy. Otherwise, you'll be left behind by the times. Because if specialized or open or agent-based AI becomes this advanced, everyone will feel the urgency to adopt it. If you don't, your competitors definitely will. And there's a real difference between adopting it and not adopting it. The difference is huge. It's really like everyone is being pushed forward by the times. So in fact, Baidu also wants to get involved in this wave and get a piece of the pie. Why do they want to push and set the standards? Because they've realized this. They've come to understand the importance, the disruptive nature, and the revolutionary impact of this open call. They don't want to be left out, so that's why they're doing this. They started looking for areas where they could get involved or points where they could make an impact. That's why they launched this name club. Then, Baidu realized that open call does have some issues. Even though it's very powerful, if the open call itself has very high-level permissions. It can access our files or cities. This could put companies or individuals at a lot of risk. For example, your financial assets might be limited, or your 5G could be taken over by a second or third party, and so on. This is currently the biggest challenge, so this is like an insider threat, and that's why we need isolated sandboxes or privacy routers. Of course, this AI agent can run in an independent and controlled environment. If you have sensitive data, you'll keep it locally and won't fall for traps. It also won't be exposed to the public cloud or any other external environment, so this is quite a significant change right now. All right, so what does this internal shift mean for software stocks? Looking ahead, well, what I can see is that software stocks have been performing pretty poorly so far this year, mainly because of concerns around AI agents. With the rise of AI, people started to wonder why we still need these expensive services from software companies. Why not just build our own AI agents? But now it turns out that AI agents actually have some issues, like privacy and security concerns brought by open source models. So if this new product from NVIDIA, called Nemo Onco, can address these concerns, then these software companies are actually more likely and more willing to develop such solutions themselves. If John, who is developing AI agents, realizes that building software can actually be made more secure and trustworthy for enterprise use, then he would be more willing to invest capital into its development. Additionally, in the end, the software market will likely become more segmented and diversified. That is to say, you might have some really outstanding software companies that, in the context of AI agents, are able to stand out from the competition. This could be because their services are already excellent, their customers are deeply tied to them, or their offerings are extremely comprehensive. In that case, they can leverage these AI agents to their advantage. Oh, and if there are currently concerns about privacy or similar issues, it will be able to exit more smoothly. Moving forward, the software itself will also The business model will also change, because in the past, fees might have been charged per user or per usage. In the future, it might be based on results or tasks completed. So for software companies, customers won't just be buying the software itself. Instead, they'll be hiring the software company's agent AI to solve certain problems and achieve specific goals. So in the future, software companies may see a revaluation. In this way, things will likely become much more segmented going forward. Really strong security companies or large security firms with lots of resources will do pretty well, but those smaller, less organized companies, if they can't adapt to this change, they'll end up being eliminated or acquired and so on. So this is something we can keep watching. At the same time, every time we look at this, the question is, now that this has been proposed, will the AI agent ecosystem see more opportunities? Will more companies be willing to develop their own AIs and open them up for their customers to use? That's something we can keep an eye on going forward. All right, so looking at these three software stocks, it seems like they still have quite a bit of potential going forward. The main point is this. As for Microsoft, it's been underperforming and has been in a slump for quite a while. Next, there's CRM. CRM has also been pretty weak. You can see that their chart patterns look very similar. And it's the same with ServiceNow. So going forward, everyone can pay attention to either large software companies or smaller, more niche software companies. In certain specialized fields where these companies excel, there would definitely be some opportunities. Next, let's take a look at some asset price changes. First, the US dollar index. Yesterday, the US dollar index dropped quite a bit, but even with that drop, it's still at a pretty high level. So for now, the US dollar remains relatively strong. Of course, this can change as the market shifts. However, if the war situation eases, the US dollar will correspondingly weaken again, but for now, it's still maintaining a relatively strong position. As for bond yields, they're still staying at high levels. Even though there's been a recent dip, if you look at it, the yields are still quite high compared to before, especially when you look at the situation at the end of February. It's the same situation with the 4-year yield. It's still staying at a relatively high level. Going forward, it really depends on whether the probability of it rising increases. If it does go up, it will put real pressure on the stock market. Right now, it's just hovering below 5, and it's very possible that maybe if the Fed doesn't pause or slow down for now, and inflation doesn't ease up either, then there's still a chance things could keep going up from here. So right now, of course, we still need to be pretty cautious, mainly because the current index is still at a relatively high level. And although there was a rebound yesterday, but overall the situation is still pretty weak. Right now, you can see that yesterday's rebound actually has some upper shadows on the candlesticks, which shows that the market sentiment is still pretty cautious. There's still a lack of confidence, and the upper shadow on the NASDAQ is even more obvious. The semiconductor sector also had upper shadows, and yeah, its performance is even worse. If you look at the 2000-point level, there's also a pretty obvious upper shadow, but you can see that almost all of them have upper shadows. All right, so next, let's take a look at the current global developments. Actually, just before the market opened, there were some new reports that, for now, the news about escalating tensions continues. Iran is still attacking neighboring Gulf countries like Iraq and the UAE. Both have had areas hit or some important infrastructure shut down. As for Trump, he's threatening that if there are more attacks on Iran's key oil export hub, Karg Island, he will. Previously, he targeted dozens of types of military facilities, but now he's threatening to strike dozens of types of oil infrastructure in the future. In addition, he's also, once again, calling on other countries to help the U.S. and ensure safe passage through the strait. But actually, at this point, all of this is still just talk, so we'll have to wait and see what happens next. In addition, some organizations have said that Iran might allow passage through the Hormuz Strait based on political leanings, meaning certain ships could be allowed through. Right now, it looks like countries such as Iran, Pakistan, China, and others might have the opportunity to do so they can keep exporting oil. This means that the current situation might become more divided. Countries that have a decent relationship with Iran or those that are not aligned with the U.S. will likely continue to receive oil imports and supplies. But if you're a U.S. ally or closer to the U.S., you might face difficulties. This is the situation that's being described. Yesterday, we were still thinking that maybe Trump and Xi Jinping probably wouldn't cancel or that they would probably meet together. But what happened after that? So today we also saw that Trump did indeed postpone his meeting with Xi Jinping, and this meeting will probably be pushed back by about a month. Now, it looks like it'll take place at the end of April or the beginning of May. Actually, China had already wanted to postpone this meeting before because they were thinking, well, Trump is busy dealing with Iran, and yet you still wanna? They were to meet in late March, but the agenda was unclear. China felt Trump was unprepared and insincere. So both sides actually welcomed this delay. It gives the U.S. time to prepare and catch its breath. Let me see if I can wrap up each of these points one by one. For China, this just means having more time to get ready and maybe even gaining more leverage or bargaining chips, or even helping out Iran and so on. Right. Okay, so right now, there are actually even more reports, and at the moment, some people are worried that the conflict might escalate. Why is that? Because the U.S. is currently in a situation where things are going south for them, and they want to quickly involve Iran. But they can't do that, and now they want to pull out. But they can't do that either, because right now, Iran holds the upper hand. So if you really want to resolve this U.S.-Iran conflict and find a way out, you might have to escalate the situation, deliver a heavy blow to the enemy, and really hit them hard. Basically make it look like you've won, and then you can leave. That's kind of the idea. Right, so how exactly can they pull this off? One way is to deploy ground troops. You might not need to send a lot, you might not need to send a full-scale force, maybe just a few thousand troops would be enough. But that's still deploying ground forces, because as long as you send American personnel, that's still considered sending in troops. So, as for yes, one possible fallback plan is to ramp up the pressure, launch a heavy attack on the enemy, and then pull out. This is something the US might actually do. Why? Because they might want to save face by sending in troops. If the U.S. just pulls out now, everyone will think, hey, the U.S. couldn't achieve its goals in Iran. And then, if they can't even pull out, then what are they supposed to do? So that's the feeling here. That's why some people are worried about the U.S. sending in troops. But the U.S. still has a lot of options besides deploying troops. They could impose sanctions or strike Iran. For example, they could intercept oil tankers, since some tankers are passing through right now. They could intercept them and say, hey, you can't pass through. Basically just stopping and inspecting them, that kind of approach. Or they could launch cyber attacks to hit Iran's financial assets or something along those lines. They could also use a series of naval operations and so on. But as for how things will actually play out, we still don't really know. Like I mentioned before, even up until yesterday, for most people, if you don't have inside information, it's really hard to know how things on the battlefield are developing. So honestly, there's not much point in discussing this topic too much. We might as well just keep an open mind and keep following the news as it comes out. Now, moving on, this is news from Beijing. It says that the Israeli foreign minister stated that the current casualties include the head of the Medical Security Bureau and a branch under the Revolutionary Guard. The leader of the Bajik militia is also among them, but this hasn't been confirmed yet. If it is confirmed, then the head of Iran's Security Bureau would actually be the second most important figure to die after Supreme Leader Khamenei. So right now, the situation is still extremely intense and ongoing. So as we can see right now, if this is the case, if the head of the Medical Security Bureau is killed, then there will definitely be retaliatory actions to follow. So the fighting's still going on intensely. All right, so right now, actually, a lot of institutions are relatively optimistic. Yesterday, we also mentioned that Goldman Sachs, Morgan Stanley, and JP Morgan Chase all still maintain a relatively optimistic outlook on the stock market. And today, we're seeing another relatively optimistic expectation, which is that Morgan Stanley mentioned in June, they expect rate cuts to resume, and there could be another rate cut in September. But right now, the market is only expecting one rate cut this year, and that would be in December. So that outlook is actually quite different from the market consensus. However, they also mentioned that this expectation might be revised because they admit that this assumption could be wrong. So actually, there weren't these kinds of expectations before, but as of yesterday, because the situation eased up a bit, there was this expectation of a 25 basis point cut. But this expectation, it might disappear again in a few days if the situation escalates. So right now, overall is really hard to say, but the 18th is coming up soon. So we'll have a decision on interest rates very soon. So let's just take a look at their latest statements, and that's enough. All right, next up is the chairman of SK, one of South Korea's 4 major conglomerates, and also the parent company of SK Hynix. The chairman, Choi Tae-won, said that the chip shortage will continue until 2030. Why is that? Mainly because of a shortage of wafers. Takes about 4 to 5 years to ensure a stable supply of wafers, so going forward, semiconductors will remain a major investment theme. Everyone can keep an eye on individual semiconductor stocks. Actually, for these few stocks, you can observe their price movements and possibly use technical analysis to operate accordingly. There's definitely a chance to make a profit here. We mentioned at the very beginning that Hwang Chang-Quinn said promoting copper wire is very important. Going forward, both copper and optical will likely advance together. So currently, analysts are pointing out why Huanglong District is doing this. It shows that actually CPUs are still not that mature yet. The market expects them to become more mature, but the technology hasn't really reached that level. So in the future, for things like MA-Link 70F140, copper will still be used to scale up. So when will CPUs be able to have a bigger impact on market share? That might have to wait for the vertical architecture, the NBL 576+. Only after that will there be more. More of this kind of application will come, but as of now, it will probably still take at least another year or two. This is also related to, previously in the A-shares market, people thought that CPUs were still just in the conceptual stage, but in the future, as the technology evolves, it should gradually become a reality. All right, and then there's also news about private placement credit. We mentioned with Say that private placement credit will definitely rise. Why is that? Mainly because of the software. Right now, AM is still in a position to disrupt them. We also mentioned that software won't become fragmented, so if you haven't kept up with software stocks, you might be under even more pressure. In the past, a lot of asset management companies lent money to software companies because they valued the software company's cash flow capabilities and their profit margins. They're predictable because with software stocks, there's a clear BNT effect. Basically, once you develop a good product, every additional customer can significantly increase your profit margin. This makes it easy to forecast. So this is actually a relatively stable business model. But with the development of AI agents, this stability is being disrupted. This is also a result of technological change. This is a prime example of a major industry disruption. Right now, the software industry is the largest sector in investment portfolios, accounting for nearly 30%. So, going forward, we still need to keep a close eye on the overall development of the software industry and identify the best companies within it. All right, next up is the price of diesel in the US, which has actually risen a lot recently. In December 2022, it broke through $5 per gallon. So, moving forward, whether it's oil prices, natural gas, or fertilizer shortages, all of these will have a significant impact on the US. Right now, the pressure on the Biden administration is pretty intense. That's the situation. Diesel is also crucial for freight, agriculture, and manufacturing as a power source, so its impact is going to be very widespread. All right, so actually, whether it's diesel or not, high oil prices are going to be very damaging. This oil price chart here, I took the screenshot at 7:50 before the live stream. You can see that oil prices are still generally trending upward. Even though there was a big drop yesterday, today they're climbing again. So actually, both WTI and Brent are showing the same situation. We'll just have to keep watching going forward because based on the current trend, just like we talked about yesterday, it really looks like oil prices could break through 120 and then keep going up from there. So even though this might not happen in just a few days, during this process and against the backdrop of rising prices, it will still put a lot of pressure on the market. In fact, high oil prices are already very damaging to the market. So this is the current situation. Everyone really needs to pay extra attention. Given the overall development of the market right now, as well as the current changes and trends, let's first take a look at the pre-market strengths and weaknesses. Right now, you can see that overall, well, basically, honey, I just checked the US stock market, and it's only down a little, but for now, it seems okay. A lot of stocks have started to rebound a bit, like BANR and others. So at this point, everyone still needs to weigh their options. There shouldn't be any major announcements at 8:30. At 11 o'clock, it should be the industrial production numbers. Actually, it's not industrial production, it's retail sales. Yeah, at 8:30, there's the New York Business Survey, and it looks like the expectations are about the same, so the impact shouldn't be significant. Then there's the weekly change in ADP, which also shouldn't have much impact. It seems like things should be okay. All right, so you can see that right now, the overall market share is basically, it should still continue yesterday's rebound a little bit. Of course, as for how much it can rebound, that's still a question mark. You might get it back, but that's uncertain. You can see that yesterday a lot of stocks had upper wicks, meaning many stocks went up a lot during the session, but by the close, they gave back those gains. So, as we've seen before, we still need to keep watching. All right, so what's more important on the upside is that there's Lemonade is an insurance company, and it just got an upgrade in its rating. And as for the downside, you can see the Nebu dropped quite a bit. Even though Nephew went up a lot because it signed a deal with Meta, today it dropped more mainly because of its bond issuance. So, looking at this, the rally probably won't last long. It's likely just temporary. The market sentiment is still pretty fragile. It might go up one day and then drop the next and then rise again. Another thing worth noting is that today, all the official communication stocks went down. The main reason is that copper still holds a certain position and the communication sector is under quite a bit of pressure. All right, now let's take a look at the S&P 500 segment. Right now, the one that's up is Delta. The bookings numbers are even better than expected, so there's some optimistic outlook. As for Uber, personally, I think there'll be some collaboration talks. Besides Uber, Lyft is also collaborating. From Meta, they're about to release their earnings report, so people are still relatively hopeful. Then, Delta is also driving up companies like Unity along with it. So if we look at the stocks that have dropped the most right now, actually communications related concept stocks like Counting and CNN, among others, are down. Another group to keep an eye on is the Bitcoin related stocks. Currently, Bitcoin is performing pretty well, just like we talked about yesterday. Basically, in times of turmoil, there's a demand for safe haven assets, and Bitcoin is also more flexible and easier to move around and hold, among other advantages. So, Bitcoin-related stocks are still worth paying attention to in the near term. As for NBS crashing, what actually happened is there might be some pressure, but overall, this kind of development is actually a healthy business practice. It's also to prepare for more operations and further capital investment in the future. So this situation should only have a short-term impact on them. In the long run, the negative impact probably won't be that significant. So today, we're mainly watching to see if the market sentiment can continue to find a way forward amid all this confusing news, and whether it can keep up the rebound momentum from yesterday. It might be able to move up a bit more, forming a slightly upward trend. We'll have to see if this upper shadow can still persist. If there is a drop, honestly, it's pretty hard to predict the next move right now. At this point, it actually looks like it's even harder for the market to go down further. But in the next few days, there will be a slight chance for a rebound, so if you want to make any adjustments, you can take advantage of this opportunity. All right, that's all for today's Coin and Good Night. Thank you all for watching.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.